and welcome to this next session. I'm very excited to have been asked to chair our FinTech Showcase. I am extremely ill-qualified to do so since I can barely download an app on my phone, but the good news is that this is all about technology as an enabler and as an engagement tool. So it's really going to be very much a show and tell type session. So I've got three experts in their field to talk to you today. So we've got Michael Lightfoot, who's Director of Platform Solutions at Aquila Heywood, Marc Hommel, who's an entrepreneur working in FinTech, and Neil Bage, who's the founder of BIQ. Now, I'm sure there'll be lots of questions, so please do send those through on the app, and we're also going to try and make sure that we leave enough time for questions at the end as well. So just before I ask Michael to take the stage, as he's going to go first, I'd just like to kick off the session by showing you a new format for a member benefit statement. It's a personalised video, so it's really designed for this show me, don't tell me generation that won't necessarily open an envelope, but will actually watch a video. It's, you know, the YouTube generation. And I was really interested to see the video that was made by the conference challenge teams, because what we've got here is very similar in concept to that video. It hasn't got the charming guy with a cup of tea holding up numbers, but I think the essence of it is very similar. So let me show you the video.
Hello, Alex. We want you to get the most from the ABC pension scheme. Find out in this video how much you've saved and what that might mean for your future self. So far, you've saved just over £24,000 in the scheme. But how much could that give you to live on when you retire? If you keep saving the same amount each year until you're 69, in today's money, your savings in the scheme will give you about £5,600 a year to live on in retirement, plus a tax-free cash lump sum of around £40,000. But will this be enough? No. If not, there are things you can do now to help. At the moment, you pay in 5% of your salary. And your employer also pays in 5%. So 10% of your salary is going into your savings. That's around £230 a month. If you paid just 1% more towards your savings, you'd get 1% more into your pension from your employer as well, giving you about £40 more towards your savings every month, which could increase your potential income in retirement from around £5,600 to the equivalent of around £6,500 each year, and increase your tax-free cash lump sum from £40,000 to around £47,000. It's worth thinking about. And remember, you choose how you want to take the money from your pension savings in the future. All of it is cash. All of it is guaranteed income for life, usually called an annuity, or flexible income using drawdown. Simply click here to find out more, or to pay towards your pension savings in the ABC pension scheme. Create your future with the ABC pension scheme and Legal & General.
So when I showed that video to one of our clients, he said, well, at least you can't throw that in the bin, which was faint praise indeed, I thought. But it's really quite interesting. So cheaper costs of tech means it actually costs 32p to produce one of those videos, and it costs us 50p to send out a paper benefit statement. So I think we can tell where the market is going to go on this. And we are actually rolling out our first real-life version of this later this year. So this is real here and happening. Now, I'd like to hand over to our experts, and let's start off with you, Michael.
Thank you. Good morning, everybody. That video was good proof that a little goes a long way. My name is Michael Lightfoot. I'm Director of Platform Solutions at Aquila Heywood. Over the next 10 minutes, I'm going to talk to you a little bit about how we see the market, how we think from a technology perspective, and how we actually want to affect that behavioural change. So bridging the gap, it's rather complex. I think if you think about this millennial term, and I don't want to use that, I promised myself I wouldn't use millennials too much today, but I'll discuss in a little bit later on why I don't think millennials are that truly unique, and actually how do we affect the behavioural change and thoughts and interpretation of how that younger generation engage with their pension, their long-term savings, because at the moment bridging that gap of understanding is not front of mind for those individuals. We hear a lot, certainly in the technology industry, if you build it, they will come. One thing that I've learned over 10, 15 years of technology vendors' experience is they will not. So I spent 5 years rather frustratingly, albeit rewardingly, in an e-billing environment and telco organisation, at the point in which your mobile network operators were turning off paper and pushing you all to apps and e-billing portals, and they built it. They built all of this great stuff, great immersive technology for you to engage in, log in, see your bills, analyse the data that sits behind them, and they managed to convert between 5 and 7.5% of their entire subscriber base onto those platforms. So they will not come. Within Aquila, we run a whole bunch of thought leadership sessions. We do them regularly. We bring people along. We ran one very recently for Tier 1 pension providers and asked exactly the same questions. What have you built? What's the experience? And we've built the portals, we've built the apps, but we're really not yet getting that immersive behavioural change. We're not affecting that. And it comes down to personalisation. It comes down to how you engage and how you embrace a wider ecosystem, in our opinion. Amazon has become the benchmark for a lot of what we do in a consumer world. 80% of UK consumers compare every digital service to Amazon. And by every, I mean our pensions, our banks, all of those services which aren't as exciting and aren't as ready as a typical consumer e-commerce environment. But that is the relevance, that is the benchmark that we have to look to when we start to think about how we affect this behavioural change. Sky TV have been personalising, whether or not we're aware of it, the videos that they send to you on your set-top box for the last 2 or 3 years. They're using the back-end data and the business intelligence and the knowledge of you as a consumer to personalise those videos that you receive on the fly. So if you think about the scale and the complexity of doing that, then certainly within our industry, we should be able to go further and affect more change. But we come back to the problem of how do we get the younger generations, the M word, to engage? What is the challenge? Because you know, a lot of people in that demographic, they can't perceive their future self. The idea of a pension or retirement, even actually now a mortgage, is something that they can't grasp. They have a very much a live for today attitude. They don't save in the way previous generations have saved. They have a very negative perception of retirement. It's come to something when the banking industry is actually an accepted and becoming a much more technology savvy sector. You know, 10 years ago, you'd have never thought Barclays was going to be an innovator. Then they launched Pingit and mobile payments into the marketplace. They learned a lot about their customers by doing that, because their customers were sitting behind their brand almost every minute of every day. So how do we make and drive a lot more relevance in terms of the engagement? Exploding the myth in terms of this millennial bunch, well, they are a little unique. But if you believe Boston Consulting Group, there are many different forms and factors. So for me, it doesn't make them unique. Sure, they've grown up in a much different technology, social, and economic environment to previous generations. But frankly, previous generations had their own challenges, their own quirks. What this slide tells us and what Boston tells us is within that community, there are 7 different types of millennial. So, you know, they think differently. We're all different. So therefore, if you're going to cater and provide dashboards and immersive technologies for this audience, you have to learn about them at an individual level. And you have to serve technology at an individual level. I'd like to talk a little bit about how I think beyond the technology that typical providers in this area serve, you can really start to embrace change and the market can start to affect that behavioural change. making long-term savings more relevant, making it something that actually you're interested in. It forms part of your daily life. If you look at our wider ecosystem, if you look at our day-to-day lives, our gift-gaff accounts, our Vodafone accounts, our O2 accounts, if you look at NatWest and some of the banks now, they all have reward schemes. We're all sitting behind reward schemes. I listened to the last few minutes of your chair in the previous session talking about there's 20 million pensioners out there. Well, hey, there's 20 million Nectar card users out there, of which the average balance is about £22. There's £5 billion sitting on loyalty accounts, which people might use to go and buy the turkey at Christmas and a variety of different things. But this is all about thinking how we embrace the day-to-day existence of people, thinking about actually how we challenge people, thinking about how we make long-term savings relevant to that audience. So, you know, I've taken a very simple example here of you're sitting on a whole bunch of loyalty accounts. We provide the technology that enables you to go and establish these alliances and these relationships with the broader market. You can start to deliver some really exciting stories behind how people top up, how you make them aware. And back to the opening video, a little goes a long way. So does my £33.36 top up, does that go straight to my bank account, or actually does it go to my pension? And where do I do that? Do I do it through my pension app? Do I do it through my banking app? Do I do it through natively my mobile environment? Do I push it from my Nectar account? These are the things that will change those behavioural views and make people engage with their long-term savings much more readily. So I think, you know, thinking outside of the box is a horrible term, but it really is that simple. You know, I think as an industry, we have the blinkers on. We need to take the blinkers off. Some great technology providers in this industry, established fintech and otherwise. But what we're not doing is taking the blinkers off, embracing those alliances, talking to the wider community, applying simple concepts and morphing that experience. And most importantly, listening to the customer journey, listening to what your customers are saying, listening to if they're happy, doing that dynamically so you can change on the fly. We've all talked about omni-channel for a long time, having paper, having portal, having email, having SMS as part of our channel strategy. Great, fantastic. They're just channels, they're just static channels. What we need to be thinking about is the opti-channel, the optimum experience. So targeting the right customer with the right message through the right channel at the right time. And that's what will affect that change, that personalization of engagement. So at Aquila Heywood, we're working on a lot of technology, opening up our back end and our APIs to be able to embrace that wider community, deliver really immersive technologies and experiences so they are personalized, they're relevant, they're simple and timely, and consolidating a lot of the technology so people actually feel that their pension and long-term savings is part of their day-to-day life, not just something that's going to happen at some point in 40 years' time. So I'd like to just finish up now with a short video to talk through about what we see as being some of the next generation of engagement in this space. Thank you.
As individuals, we all know we should be saving more for retirement. So what's stopping us? Let's consider Jamie, a 40-year-old father of two, who's been saving since he started work. However, he's unaware of the new freedom and flexibility now available to him. So how can technology help engage Jamie and support his decision-making? Based on his data, preferences and personal profile, he's contacted through his preferred channel with a personalised and timely message. From a single dashboard, Jamie can access key information, integrated guidance and advice tools. He's well informed and confidently able to set his retirement goals in just a few clicks. The platform allows Jamie to effectively manage his pension savings and investments into 3 pots: each with different investment strategies and timescales. Driven by rich analytics, targeted nudge campaigns are sent to Jamie, enabling him to monitor progress and adapt his strategy should his circumstances change. Engagement is holistic, supported by guidance and advice solutions. When the time comes to draw income, Jamie can view his wider savings and make informed decisions. Jamie has easy access to a range of products for maximum tax efficiency. He makes his income choices in a single, simple transaction. A visual summary shows Jamie's retirement income in the years ahead. Once confirmed, Jamie's plan is carried out automatically and he's kept informed throughout.
Very good. Yeah, over to Marc now. Thank you.
Thank you. Good morning, everyone. Very pleased to have the opportunity to speak to you. I want you to imagine that the clicker works. I want you to imagine that all the talk we're hearing about the dashboard has come to fruition. We're sitting here in 3 or 4 years' time, and ordinary men and women in the UK have instant access to online dashboard covering all their retirement savings. It might look like this, showing people how much is in their retirement pot and how much they can expect to get a month at retirement. That people are able to see how their retirement savings have been made up, including what charges are coming out of their savings. And that by clicking a button, they can transfer their pension from an employer or a provider to a new provider, and it all happens within 3 days. Not only that, but through this application, individuals can understand, have insight into all their financial health, everything to do with their debt, their wealth, their expenditure, not just retirement savings. And that through this app, they can see information and gather insight about their financial health, but they can also effect actions to improve their financial health. And they feel safe and secure that their data that sits behind the app will not be shared with anyone without their consent. What I've just described to you exists. Everything I've just shown you already exists. It's been existing for the last 3 years in a little country called Israel. And I've been working with the fintech company that's actually implemented all of this with the government in Israel. I want to show you, I'm going to describe to you how having this functionality in Israel has manifested itself in terms of how it's impacted society there and the way consumers behave. But before I do that, I'm going to show you a brief video. The video is an advert from the organization that has been providing the service in Israel for the last 3 years. Just to put in a bit of context, in Israel, when a child is born, the government gives you some money and you can start saving like into a child trust. Obviously, in Israel, boys have bar mitzvahs, girls have bat mitzvahs, so at the age of 12 or 13, they get a lot of money, which parents often save for them. Then people start working. It's compulsory for employers and individuals to save into a pension. And there are different types of pensions, including executive pensions. So let me show you this advert.
ביום שבו חייכת את החיוך הראשון, ההורים פתחו בעבורך קופת גמל לחיסכון. וכשחגגת 13 אביבים, הדודים שמו לך כסף בקופה שתיפתח בעוד שנים. בעבודה הראשונה שלך, שלא הייתה אטרקציה, פתחו לך קרן פנסיה. ובזו שאחרי הלימודים, קיבלת ביטוח מנהלים. המשכת להתקדם, עמדת בכל אתגר בהצטיינות, והבוס החליט, תנו לבחור קרן השתלמות. ועכשיו, אתה יודע כמה כסף יש לך באמת? מהיום זה אפשרי. וובי משיקה מערכת ראשונה מסוגה, המציגה בדרך קלה ופשוטה כמה כסף נחסך בעבורך כל החיים. בפנסיה, בקרנות שונות ובביטוח מנהלים. וובי, משווים וחוסכים.
Okay, so real life that exists, and it has transformed the understanding of retirement savings and financial health in Israeli society, including within that retirement savings. And the key learning from the experience that's been developed in Israel is that, as we know, ordinary men and women, not us guys in this room, but ordinary men and women, not particularly turned on by the notion of pensions. They don't understand it. It's mired in complexity. It's remote. Doesn't feel very relevant for much of life. And what's happened as a result in Israel of having compulsory dashboard, of having a pension data clearinghouse, of having compulsion that all providers need to share their data into the clearinghouse, and so on. And as a result of a campaign like you've just seen, people are thinking about retirement savings as money. In fact, the word pension is hardly ever referred to. You never see percentages because people don't understand percentages. Everything is in real pounds and pence. And society has become engaged, feels better informed, feels more confident. And that's manifested itself in real positive outcomes. There's been a 25% increase in the propensity for people to save into retirement savings. On average, people are paying between 20 and 50% less in charges to their retirement savings providers. On average, and this masks a whole diversity of outcomes, but on average, providers have found their new business acquisition costs are 40% lower than they were. And 10% of retirement accounts have been transferred over the last 2 years, and that's more than in the last 20 years combined. So there's been some very real positive outcomes. And this is due to technology providing a better line of sight, a better alignment between providers and consumers. It's allowed providers to target individuals more accurately, individuals that have the profiles that they want to have as customers, and it's allowed individuals through employers and directly to get better deals. Now, how did we get here in Israel? Well, it started off with government recognizing that consumers have changed, want personalization with convenience, as we just heard from the previous speaker, want instant gratification, and asking the industry to deliver. After about 3 years, government lost faith in the industry to deliver because industry decided there were a million reasons why they couldn't make it work, and so implemented regulation. Regulation created a business case through which industry had to change. And of course, technology is becoming ever increasingly affordable and its functionality is growing. So part of it was also helping industry envisage how it could deploy technology to get there. What are the lessons learned that I think are relevant for us to take forth here in the UK? I see an awful lot of activity, focus groups, providers, employers, asking ordinary men and women what they want. It doesn't really work because actually we have the ability today to provide an experience to people that they can't envisage. And I always use the analogy of Henry Ford and the horse, which most of you know back in 1903, I think it was. He said if it asked people what they want to improve their commute, they would have said a faster horse. No one would have said a motor car, and certainly no one would have said a driverless car. We, in the industry, we are locked in our world. We start from a point of thinking about pensions and complexity and drawdown and the end of contracting out. It's really not relevant. It's really not relevant. We have to learn to focus on the consumer. And there are a million reasons why we have to transform. We have to stop looking for all the why nots and all the excuses about why things are not achievable. In particular, and I have been involved on the peripheral of working on the dashboard project, I've also met with a huge number of insurers and banks and asset managers over the last 9 months. And what I'm seeing is an industry that is starting with looking at what we've got today. What data do we hold as a provider, as a pension scheme? What functionality do we have? And what is the art of possible in terms of what we do with what we've got in a way that is affordable and doesn't cannibalize our business? And we'll develop a consumer experience off that. So the left-hand side of the screen. What we actually need to do is what I've drawn on the right-hand side of the screen. We need to start with creating the experience that consumers actually need. That determines how we need to interact with people, and that in turn determines what data we need to hold. And my personal observation is I'm not seeing an industry that's prepared to do that. Finally, to share a few observations about what I've seen over the last 9 months working with the industry, a huge diversity among the providers, among employers, among pension schemes, within the dashboard project over fear versus hope. Is this a challenge to our business? Do we need to be petrified, or actually is it a great opportunity and we can afford to have a lot of hope and positivity? I see a lack within organizations. It's not always clear who owns making decisions about this. So I see a lack of decision-making. I see an abdication of decision-making, in many cases to consultants. I say that as a former consultant. And I see a lot of incongruency between words and behaviors. A lot of us in the industry saying, we must do this, we must do that, but not aligning the behaviors behind that. So in closing, I do think we've got a massive opportunity to improve the lives of consumers. I don't think we should be restricting our thinking to pensions and retirement savings. It's a good place to start, but pensions in isolation is not what it's about. It's about financial health as a whole, and because of what technology is enabling us to do, I think we do have the capability to deliver if we can put our behaviors behind it. Thank you.
Thank you, Marc. Over to Neil.
So, good afternoon, everybody. I'm going to take you slightly left field, if I can, and I want to talk about things that I haven't been covered yet. I want to talk about fintech, and I want to talk about engaging with customers, but looking at how we do that through user experience and how we do that through technology. But I'm very conscious as I stand here that most people are looking at that screen and thinking, who the hell are BIQ? And why is he wearing jeans? Why has he got boots on? It's kind of, I was just looking at the three of us, actually, and it's kind of like the evolution of man towards the end of the conference, how we're getting down to less dressed. Should have just come up in shorts and T-shirt. Let me tell you about BIQ first, and how what we do as a company is look at how we engage and how we educate the consumer. So I set up BIQ, just put that down. I set up BIQ about 3 years ago, and one of the reasons I set up the company was because I spotted a gap. Is it a gap? Is a gaping hole, I guess, in the industry and how we interact with what I call the man on the street. And we tend to throw stuff at people and expect them to adapt to our world. And in doing so, what we actually do is we kind of put people off. We bore them to tears often, and we present them with forms and paperwork that, quite frankly, makes most of us, even people in this room, look at and kind of want to poke your eyes out with a pen you're using to fill it out. And I spotted this and thought, you know what, there's got to be a better way of doing this. And my psychology scientific background kicked in and thought, actually, do you know what, we need to figure out how people just make decisions and how people interact, full stop, but based on their behaviors. So I set up a company looking at exactly that. So we spent 3.5 years working with professors of psychology and doctors of psychology, figuring out how humans make decisions when it comes to money. Now, I have to say, it's different from behavioral economics or behavioral science, whichever phrase you want to use, in that what we did is we stepped it up a notch and kind of thought, let's just look at how people make decisions, full stop. Forget money, let's just see how they make decisions in life. So when they need to do something, what is the subconscious processes that go on in their heads, and how do those processes impact the outcomes that those people are working towards? And it's quite interesting. More than interesting, it's actually extremely revealing about us as humans. And I studied sports psychology and physiology, so I have a deep interest in this stuff anyway. But one of the things that I found, or one of the things that we found, is that, and I'm sure we've covered this over the last 3 days to certain degrees, is that humans are not very good at making decisions. We think we are, but when you really dig deep into the processes, we're not that good at making decisions, and we take shortcuts all the time. I'm sure most of you have heard of all of this stuff. But what we found is that there are some quite pervasive behaviors that as humans we exhibit. So for example, we all are loss averse. And I'm sure everyone in the room has heard the phrase loss aversion. And I'm not going to go into the scientific background about loss aversion, but we are all loss averse. We hate losing. Let me give you an example, a real world example. I'm sure everybody in the room at some point in their life has lost their wallet or their purse. You can nod if you want. Yeah? No? Somebody said yes. Brilliant. I've got interaction. We can make this an interactive session. What happens is this, right? You're walking along, life's fine, and then you think, right, I'm going to pop to the shop, let me find my purse or my wallet, and you walk over to where you think it is, and it isn't there, and you look around the house, and then all of a sudden you get this gut-wrenching feeling of, oh crap, I've lost my wallet. And it doesn't feel nice. It feels pretty horrid. And then you spend a lot of time searching the house, ripping things apart, and then eventually you find it, and you think, okay, I've found it, that's fine, I'm going to the shop. Now, that psychological process that you go through during that exercise is loss aversion in action, because you feel a lot worse when you know you've lost it than you do when you realize that you found it. Does that make sense? Yes? Good. You can just mumble if you want, or nod, I can see. It is Friday lunchtime, so you can interact. And what we find with loss aversion is actually, when you start looking at how people engage with us as an industry, these behaviors are kind of sitting in kind of this subconscious mini-me, inputting into how I do things. Another one, for example, is present bias. So if I said to you all, would you rather have £50 right now or £60 in a week? Everybody in this room, irrespective of wealth, will have answered that question. And I would guess a lot of you would have said £50 right now. You're not getting it, by the way. But most of you would go, oh, no, I'd rather have money now. But if I said to you, okay, forget the £60, what about £80 in a week? Or £90 or £100? I can delay your instant gratification for a bigger future-based reward. Now, a huge chunk of the population are incredibly short-term present biased. And therein lies the problem for us as an industry when we're trying to sell a long-term solution to people who see only today in their world. So how do we know this stuff? How do we interact with these people? How do we understand this mini-me who's driving a lot of their decisions? How do we get right into the guts of the person? Because ultimately these decisions affect the future self. And I could talk for hours on the future self. It's a subject I love talking about. But you know what? The present self is in this constant battle with the future self. And the present self is absolutely the dominant force. But wouldn't it be cool, and bearing in mind what this session's all about, wouldn't it be cool if we could develop tools that showed the present self the impact of their decisions and their choices on their future self? Wouldn't it be cool if we could create, through virtual reality or augmented reality, a little Neil Bage who pops up and says, what are you doing? Don't do that. Because if you do, this is what's going to happen. And it shows my future self and the impact of my future self. You know that film Back to the Future 2, where Marty McFly goes into the future to try and stop his son going to prison? I often think, wouldn't it be cool if we could actually interact with our future self, and would we make changes or not? So, what we've done is we've developed a system called Behavioral IQ, and we put people through a whole series of processes, but in doing so, we've completely reimagined how people interact with us as an industry. Gone are forms, because we hate forms. Gone are tick boxes. And what we do is we ask people questions that, you know what, they understand and they get it. And what I want to do is I just want to show you how we do this. So we decided no more words. Let's just ask people pictures. So people can do this really quickly. They don't need to think about this stuff. How many children have you got? So I can click a button for that. And, okay, what's your salary band? And I can scroll up a few options to do that. I can put my postcode in, that's fine. And then we start thinking, okay, so how do we imagine psychology questions to test for things like loss aversion and present bias, because they're quite complex. So a lot of work went into us thinking about this, and what you do is you gamify, because people love playing games. People love simplicity and people love things that are straightforward. So you play a game of dice with them, but sitting behind it is a raft of psychology evidence as to why we're doing this. Then, really importantly, you play back information telling them who they are. And this is how you compare to the population. Then we do the same with things like present bias. We play games. And when they answer the questions, we play back. This is how you compare to the rest of the population. Because they're giving us something, we give them something back. And then at the end of the process, they get a report that says, this is who you are. This is your behaviors. There's no such thing as bad behavior, but these are your behaviors. And these are where you should really take note and where you can let your behaviors run away with themselves because they're fine. But actually, it's this stuff, and we're doing a lot of work with Emma and her team at Legal & General on this, where you can start to really dig into the education piece. So the engagement bit is easy. It's the easiest part, ironically. It's taking the output from this and helping people who are in a pension scheme or who are saving for the long term understand their behaviors, how they impact their future plans, and also design education programs around that to help better themselves and help make sure that that future self and the present self are working in harmony to get to a point in the future where, you know what, I get there and I sit down and I say, actually, I'm quite happy here. This is a good place to be. And I've got here because I've understood who I am and I've been helped along the way to make right decisions, these important decisions, make them right and make them efficient. It's slightly left field, but what I want to do is I want to finish with this. I want you to think about something. I want you to go away today and think about this. Do we as an industry overcomplicate things because it's the status quo? It's because of what we've always done. I'm not saying you do or we don't. I'm saying think about it. And is there a better way, a simpler way, of through UX, user experience, or through any way in which a customer engages with us to start to speak the language that they speak, as opposed to trying to get them to speak our language? Ponder on it. Think about it. It's a great Friday afternoon thought. And I will finish on that. Thank you.
Thanks very much, Neil. Okay, folks, right, well, we do have some time for questions. So as it's a FinTech session, I will take the ones that are coming through on the app first. I think that's only right, but you can also put your hands up. So if you are thinking of a question, get it ready now. So I have got one that came in through the app. I've actually got a couple now. So first one is, how does this all link with the pensions dashboard guide? You know, how is a member going to navigate through all of these different systems? How can it fit together for someone? Who wants to take that first? Michael,
well, I can contribute. Aquila were obviously one of the partners, technology vendors that partnered with the original pensions dashboard initiative. So we built the back-end integration services provider piece to bring all of the data sets through the various providers together and enable that querying to take place. And I think that initiative has the capability to really drive a lot of power into all of the engagement that we provide for our consumers moving forward. The way that they can basically amalgamate all of their previous existence, their life, the various different jobs, pots, etc. that they have, and bring those into a rich, immersive environment. It's no different than actually what we discussed earlier on in the session of broadening out the ecosystem and building some of those alliances. And I see the pensions dashboard as being a contributory alliance to what the providers and the market in general are trying to achieve.
Great. Marc, I'm sure you've got some views on that.
Yeah, as I understand it, the provision of pension dashboards is going to be a competitive market, so anyone can come in as a supplier and offer consumers a pension dashboard. I envision that in 10 years' time, when we look back at this discussion, we're going to laugh a little bit about it because I envision then everyone will have access through an app or whatever the future of apps is that we haven't yet thought of, to all their financial information, and immersed in there somewhere will be the retirement savings information as well. And the way it's done and the technology that's deployed, I think, will be a huge myriad. The important thing is that consumers will have a single window to their world, and retirement savings will be one thing that's immersed within that.
Great. Neil, do you have a view on that?
Yeah, I have a slightly different take on it.
But you were nodding.
Yeah, I've got Twitch.
Now he tells me.
I haven't. That's not an app I know.
So I think all of this stuff is data, and with and if you don't understand blockchain yet, I would suggest you go home this weekend and just watch a video on YouTube about blockchain. Because I think it's going to change the entire way that this industry interacts with people. Full stop, without exception, and without argument. And if you look at the pensions dashboard and you look at what we do as an industry, all it is a database of information and stuff on a person. And I think the future with blockchain and the way that and open banking APIs and all of that type of thing, I think what will happen is we will just be able to use that data in a really clever way, doing predictive analytics and telling people about things that are going to happen to them before they even realize it's going to happen to them. So I think that the future is a data-rich blockchain world where we just become the arbiters of that information, and people can live a life where they control the data, but we as an industry are providing the tools to enrich their lives. So I think the pensions dashboard is the first step in what I see as a real big tech revolution going forward.
Very good, folks. Now, really interesting question here, given we've been talking about the future self quite a lot. So if your life were driven by the future impact, would that not make us more risk averse? I'll start with you on that, Neil, I think. Yeah.
Thanks. I don't think it would. I just think it would make us more conscious of the choices that we're making today. Loss aversion is a behavioural trait, but we also have living within inside of us what we call a subjective attitude, and it's the attitude that it's our attitude to risk that things we think we'll do. By the way, it's what the industry tests today with attitude to risk tools. They test subjective attitude. They ask a person a question about what they think they're going to do, whereas actually what you need to do is you need to understand their behaviours and what they will do. And I think if you understand that future self and the impact, and they can inform the present self, I don't think we would necessarily become more loss averse. I just think we become more conscious of the choices we're making and make better choices. I think it would have an impact.
Marc?
I think it's all about, as I said, taking advantage of the technological revolution to provide people with the confidence to make better informed decisions, and to enable people to have confidence. We have to help provide them with information that's simple, understandable, relevant, personalized, etc. Some of that will be helping them understand potential future outcomes. But to me, I think we've got to be cautious about getting too much into theory, and just reflect on about, at the end of the day, people need a sense of security, confidence, relevance to help them, to engage them, inspire them to make decisions. And I believe we have the ability to provide that.
Very good. Michael?
I agree. I think, taking the technology and being much more immersive in that technology, and driving a lot more ubiquity in terms of making it within reach. I don't think we need to start to second guess behaviour right now. I think we need to actually understand the behaviour at a personal level and treat everybody individually.
Okay, I've got one that's come in now about, do you think we can make this work in the current regulatory environment? That's bringing us all down to earth from, doesn't this look great? But is the regulator going to allow this? Is it going to be a problem to do this stuff that we've shown people today?
Yeah, regulation is always going to be a blocker for innovation. But I was at a session in a previous guise where we had a number of tier one insurers present at that session, and also much more of an innovative insurer who was really changing the way they embrace with the market. And we talked about regulation, we talked about how providers work with their regulators, and a lot of the audience were talking about how the regulators hamper their innovation, and almost attributing blame in that respect. And actually the more innovative business said, actually, when we start to think about what new products we're taking to market, what new innovations, the first thing we do is engage with our regulators. We spend time with our regulators. We understand, and we walk through the storyboarding of what we're taking to market. This is a heavily regulated industry, but boy, so is banking. So is telco. There's regulators pretty much throughout all of the mass market volume consumer-based industries. So I think it's very easy to use a regulator as an excuse to not innovate.
Marc?
Yeah, I agree. In my discussions with the Treasury, with the FCA, with DWP, I hear and see a huge determination to overcome obstacles to helping consumers and making sure that we're putting consumers first. I think regulation is a why not rather than a why. I think if the industry, we in the industry can create an experience or show regulators we can create an experience that's truly in consumers' interest and prove that there's regulation holding that up, they will change that regulation. A restaurant has to have a health and safety certificate to operate. It gets closed down if it doesn't satisfy health and safety. But what gets people into the restaurant is the ambiance, the food, the music, and the service. And it's the same thing in our industry. We have to comply, but that's not, at the end of the day, what it's all about. And I think it's a why not that we should not use as an excuse.
Good. Neil?
That's a great analogy, the restaurant analogy. It's a good one to use. We've had to engage with the regulator as part of the work that we've done. And I want to rephrase that. We didn't have to, but we wanted to. And there's an element of, and we were really gracious because they opened up the doors to us and said, okay, come in, tell us what you're doing, no holds barred, we'll listen to what you're doing and why you're doing it. And it ended up with us having 3 sessions with the FCA and talking about the background to what we're doing, why we're trying to do it. And I found them incredibly engaging and willing to learn and willing to take on board new stuff and new thinking. And you start to see that coming into practice with the sandbox and the Finovate, the innovation unit that they've created. So my experience of them is different to what I've had in the past, in that I think they are very willing to innovate, and I think they are willing to move the industry forward, just with one eye on the rules and regulations that govern us all, like the restaurant analogy.
That's great. That was a really nice, positive response, panel. I must say, I do have some sympathy with the questioner, as our compliance department has said we have to send out a paper benefit statement alongside the video benefit statement. So, I think there is potentially a way to go with the reality, but it's great that you feel the regulator is engaging. We can do this. We will move forwards. That's great. Now, there's question number 3 out in the audience. Apologies, you've been waiting for some time, so please do ask your question.
Thank you very much. Nico Aspinall from the People's Pension. I was very interested to see if there was evidence around how these tools that we've been presented today shift the patterns of who is engaging and the topics that they are engaging with. My sort of initial impression is that potentially what we're seeing here is a movement out of face-to-face discussion with an advisor about some of these financial topics towards some of the online tools, and that's obviously fantastic. At the People's Pension, we have a large number of disengaged people who are lower paid, less secure work. These are people who wouldn't traditionally ever have spoken to an advisor or paid for advice. So are these tools, is there evidence that they're kind of attracting engagement from that kind of membership segment? And are they also enabling them to make decisions that they wouldn't otherwise be able to make? So, for instance, can we focus them on contributions? I informally heard someone tell me yesterday that 10% of Swedish teenagers or Swedish young people are doing stock picking in equity markets, which I thought was maybe not an appropriate use of engagement. We can debate that later. But are we seeing them finding the confidence to do things that otherwise they would not be able to do, which we in the room think that they should?
Never a short question from Nico, you can rely on that. So we've only got a minute left, guys, so that will be the last question. I'm sorry, folks, there was some more on the iPad, but it's a good question. So if you wouldn't mind, panel, just opining on that.
Yeah, so what we're finding is we spend a great deal of time trying to figure out how you replicate what I call the whites of the eyes conversation. So the conversation a client would have with an advisor, but in an online environment, because I appreciate there's a huge swathe of disengaged, orphaned clients that need to still make decisions and still need a financial future planned out for them. We are, and we can pick this up afterwards, but we are seeing a shift in those type of people and how they engage and how they are starting to re-engage, because once you tell them a bit about themselves and you signpost how they can help themselves, we start to see people pick up the baton and doing something about it.
The huge proportion of the resource that goes into advice in our industry is geared towards the top 5% of earners in the population. The rest of the population doesn't need the complexity of advice, doesn't need to understand drawdown, etc., etc. So I think a lot about what we construe as advice and a lot of what we built into our systems and regulations and so on is not necessary to help the great majority of the population, and it's one of the things I've been very actively discussing with the Innovate section of the FCA about how we do need to have a new paradigm about what we mean by advice and how we can take advantage of digital to truly help people make informed decisions.
Last very short words.
Yeah, very short words. So we cover a very broad spectrum in terms of our capability. We recently engaged with a corporate who has they're a huge landowner. They have a very broad demographic of earners, so single figure thousands a year, and they are focusing very much on how all of their employees engage right across their financial wellness journey. And I think, Nick, it's a great question because you've got to use technology to empower those people to make better decisions, not just people that are earning upwards of £50,000 to £60,000 a year, but very much the full demographic.
Great. Well, with that, I'd like to bring this session to a close. So can we thank, please, Neil, Marc and Michael. Thank you very much.